Well, we are seeing markets sell off once again today. The Dow at the lows of the session, and we've got a lot more volatility persisting. Our next guest says the risk sell-off isn't done. We can see that in action today. Joining us to discuss is UBS Head of Equity Derivatives Research, Stuart Kaiser. Stuart, it's good to see you.
Good to see you, too.
So you deal in derivatives. You're watching all of this volatility. The VIX again today is, at 52 or so. Even yesterday, when we were rallying, it was still at elevated levels. Are you seeing any underlying market signs here, as you read the derivatives tea leaves, that there's any stability? I mean, if you look at the surface, there doesn't seem to be any.
Yeah, honestly, in the U.S., no, we haven't seen any. I think if there's any bright spot, it would be Asian markets seem to be behaving a little bit better as cases kind of, crest a little bit in China. So if you're thinking that's our future and that, will arrive here in some number of weeks, then that would be the positive. In the U.S. markets, frankly, things just still look very troubling to us. With 10-year yields where they are at such a low level, that sends a very bad growth signal to the markets. The amount of volatility in gold, the Japanese yen, and the U.S. 10-year Treasury, which are your typical safe havens, is just very, very high. We think that's a risk indicator for equity markets. And to your point, even on good days, implied volatility doesn't come down very much. And I think that's the market sending you a message about how long this could persist.
And you actually sent a note to your clients where you talked about three things that tell you this is going to persist. I want you to get deeper in that. For instance, you talked about 4 to 6 month segment of the VIX curve is very high. Mm-hmm. Should we be paying attention not only to the VIX, but are there other things we should be looking at that support the problem that we see with the VIX?
Yeah, I think the key for us there is when the VIX is basically negative related to the S&P. So when the S&P bounces, the VIX comes off. But even when the S&P has risen, that longer dated VIX part of the curve has not moved at all. And I think that's the market telling you we might have a one-day bounce here, but really over the next 4 to 6 months, we're really concerned about the growth outlook and the outlook for markets. So we do kind of keep an eye on that. The second thing we're really concerned about is growth-sensitive equities within the market also have been trading lower even when the market has bounced as well. So it's almost like the market's taking an opportunity to get short growth stocks even when the market recovers. So the internals of the market are basically telling you, we're worried about the level of yields. We're not going to take down the price of risk even when the market rallies, and we're going to attack these growth stocks whenever we can. What we try to do is back out an implied ISM out of the equity market. That number is below 50 for the first time since 2016. Mm-hmm. So the pressure on growth stocks has been really acute. And until at least one of those things improves, we're going to keep being concerned about the market.
So what's your read on liquidity for right now? I know that you also work with derivatives. I'm wondering what that looks like. Are people able to find counterparties, and has that changed since, let's say, 2 weeks ago when we saw some market sell off, but to then this point where there have been concerns since the Fed cut of maybe liquidity actually getting worse since then?
Yeah, I mean, I haven't seen the data directly in the last couple of days, but I think there is some concern about the level of liquidity in the markets. I think the other concern, frankly, is not necessarily equity market liquidity, but when credit markets sell off, when mortgage markets come under pressure, if you need to hedge those and you can't sell those bonds, a lot of folks will go to the equity markets to try to reduce their risk. So the VIX and equity futures have almost become the default go-to to kind of take risk out of your portfolio.
Liquidity gets better in that case when people flee from credit markets to equities?
I would say it better get better. The plumbing of the equity market needs to be really strong because people in other asset classes and in other parts of the world are coming to kind of use S&P to hedge broader portfolio risks.
We are looking at sort of an unprecedented situation. I just wanted to bring in some headlines from Anthony Fauci, who is the director of the National Institute of Allergy and Infectious Diseases. Right now, he's testifying on Capitol Hill, and some of the headlines that are coming from that catching my eye here. He says the worst is indeed yet to come in this situation. He also talked about the possibility that the NBA play without audiences. In fact, he seems to be recommending that. He says, as a public health official, we recommend against large crowds. So that would imply that we are going to continue to see big drops
and you see it right there,
and big drops in the market, Stuart.
And you brought up the plumbing.
Yes.
Okay, it's not just equities. There was the concern, I forget who, it was JPM put out the note about treasuries and the ability for, overnight for these things to go back and forth could possibly face problems as people work from home.
And I think this sort of reinvigorates the discussion of, banks are not able to hold these assets on balance sheets. So maybe 10 years ago, if credit markets were under pressure, a bank could buy a distressed bond and hold it on their balance sheet. They really don't have as much freedom to do that anymore, which means it's hard to reduce risk in the credit markets. You need to almost come to the equity markets where there is that liquidity. And to your point in the headlines, I mean, our view here is, and it's not it's a qualitative view that eventually you're going to get some negative domestic headlines that it's going to be very hard for particularly retail investors to ignore. I mean, if you speak to a lot of people outside of the tri-state region, they're not experiencing coronavirus yet. You haven't had cases in a lot of states. And when that starts to kind of blossom up in other places, it sort of adds another degree of pressure in the markets potentially.
Yeah, the West Coast seems to be experiencing a lot of shutdowns as well right now. Stuart, thanks for being here. Stuart Kaiser is UBS Head of Equity Derivatives Research.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.